Folks, I've got a quick trade idea for you on the go here, so don't worry about the noise and the hubbub behind me. The central bank, the Swiss central bank, has just announced its monetary policy decision for September 2023, leaving rates unchanged at 1.75% versus expected 2%. Now, this is important. The expected change was 0.25 up to 2%. They left it unchanged at 1.75. So unmet expectations are the order of the day here. Now, there's a trading opportunity that I want to point out to you. We've got another central bank policy decision coming up in a few hours' time. In fact, in about 3 hours' time from now, 3 hours and 1 minute. And that's the Bank of England. Now, there's uncertainty about whether they're going to raise interest rates by 0.25 or perhaps even 0.5%, or they're going to keep the rates unchanged. And I think the idea is that we'll probably see the rates unchanged, but it's pretty close. And if you have a look at what the expected number is, 5.5%, the current rate's 5.25%, that's coming out at 1300 my time, 3 hours from now. There's about a 50-50, I think slightly weighted to unchanged, but about a 50-50 chance that they will either raise or won't raise. And could we see a similar market reaction to the Bank of England that we saw to the Swiss National Bank or the Swiss bank? So let's have a look at the charts and see what happened to the Swiss franc. And here it is here, Swiss franc against the yen. I'm talking only about the yen now. I don't want to talk about the Forex majors because they're a bit of a mess, quite frankly. And I think the path of least resistance is the sell-off against the Japanese yen. This is what happened. We sold off by more than one full handle on the Swiss against the yen, dropping from about 165 to, well, 163.60, so almost 1.5 handles really, and breaking down through this key sort of flat bottom support level around about 164 and heading lower. So a dramatic move lower on the Swiss franc against the yen. Now, let's have a look at the pound yen, and this is where we are. We have a very similar chart, and this is the trading opportunity I want to point out to you. We've got a sort of a flat bottom here with a descending triangle top. So it's a kind of a descending triangle. Theoretically, we've actually broken down through the flat bottom already and retraced back to it from underneath. So we're actually below that key support level, but we're forming another flat bottom. If the Bank of England comes out and leaves rates unchanged, I think this could be an excellent trading opportunity to short the pound against the Japanese yen. And if it follows suit with the Swiss against the yen, we could fall by a handle or more. That would take us from 182.50 down to 181.50 and perhaps as low as 180, maybe even down into the 178, 179 region where this previous spike low is. So watch out for that news the moment it comes out. If the Bank of England leaves their rates unchanged, I think there's a fantastic trading opportunity to sell the pound against the Japanese yen for a significant move lower. Why the yen pairs? Because I think these are the paths of least resistance right now, and there's a lot of uncertainty regarding the dollar index and the major currencies against the dollar. But considering everything going on with the yen pairs on the technical charts, and also considering that tomorrow in the early hours of the morning, the Bank of Japan announces its interest rate decision, and also we'll get a look at their CPI and PPI numbers going ahead. There could be some big announcements there. I think this is the path of least resistance, and if we see an unchanged rate from the Bank of England, watch out for a similar chart to the Swiss against the yen, on the pound against the yen, which, as I said, is already below that flat bottom support and making an interim one right now. We could fall down quite sharply. I hope you found that useful. If you did, please give the video a thumbs up and consider subscribing to the channel. See you in the next one.